Good afternoon, Market Chameleons, and everyone joining for the first time. Thanks for coming by and watching our after hours webinar series with Ryan Mastro from OptionsRobot. Before we get started, let's take a look at the shared disclaimer. Please be aware that neither Market Chameleon, OptionsRobot, Ryan, or myself are a registered investment advisor or a broker dealer. If you're searching for investment advice, please reach out to a licensed professional. This webinar, as all our webinars and shows, are for informational purposes only concerning Market Chameleon and OptionsRobot tools and products. With that, one last look at the disclaimer. Now let's welcome Ryan to the stage. He's going to be talking about what went on in the market today. How you doing today, Ryan?
I'm doing well. How about yourself?
Good. Let me share your screen. There's the Market Chameleon landing page. So what do you have for us?
So it's kind of a weird day. Let's just go over and do some charts real quick. Let me hide that thing so you guys have to look at that and look at some of what went on. So just looking at the Qs today, we had a big gap up. And I think the kind of last thing everyone wanted to see was another red candle, right? We had a lot of green in here. I was counting them down like 16, 17 days to 3. So it was really doing okay. And obviously war, oil price, credit risk, or I should say private credit risk, have really taken hold. So the market just kind of doing a little bit of selling here. There was like rumors floating around that today that Trump was going to come out and say that we had a ceasefire now and trying to move things forward. Didn't happen, so at least not that I've seen yet. So we're just kind of watching and waiting. The big gap up today was, I think, a little bit of a surprise to me that it gapped up so far, right? Same thing with the SPY, same thing with the IWM, all looked pretty good at the start of the day. Unfortunately, they've all faded off, right? So that's just not a good feel for a candle that is another. It's great that it gaps up, but the last thing you want to do is have it kind of get sold back into. So, I'm watching. One of my best trades last week was a SPY put condor. And just to kind of come back and explain what I had done is I had bought, and as protection, a put condor. And a put condor is basically a put vertical and then selling a further out of the money put vertical against it just to help finance it. So it was a $20 wide. I had a 680, 660, and then I had sold the 650, 530 put spread against it. So it went up really, really well. I bought into it for like 320, ended up selling it for like $17, $18. So our subscribers were doing really, really well with that in terms of that spread. And I think that's part of being able to look at the market. And again, I was doing that more of just protection. So yeah, we lost money in some of the longer term names that we have. But, when we look at something like this is one where just didn't like the market at all. What was going on, oil kind of like, oh, we were supposed to be doing okay on oil. And then oil basically as jammed back up. You can use something like USO to kind of give you an idea on that. So they jam that right back up into higher prices. So, this could be, if we can get the straight open, then I think this could be right back down, right? Because you have all the SPRs open. Europe said they were unleashing oil. Japan said, and US. So, we don't have anywhere near as much as we used to because that was diminished under the last administration. But, now, again, I think part of that is also Congress, because I think Trump tried to refill this a little while ago, and I think he only gave him half of it. So they did replenish to some extent, but nowhere near what we should be, especially when oil was down as low as it was for such a long period of time there. So this is something that could persist, right? We could see this for a couple more weeks, a little bit more volatility back up in here. So I'm not actively trying to play this in any direction to say, oh, you got to be in a put right here, because I think we could definitely go higher, right? Anything that if Iran does anything where they start to damage their neighbors' delivery systems, then I would say that is going to be more problematic, which there was a lot of talk, right? We had early shots into other countries. So that could happen. And that's what I think, maybe their last ditch effort could be, is to ruin the market here for a while, right? So I think that would be on the radar. From a market perspective, we've been watching this kind of credit thing that's been going on. And the credit is a lot of the private credit. So banks are lending money to these private credit lenders, and they're basically getting their return off of them. private credit lenders basically then lending money out to individual companies and just basically trying to keep the economy going. The problem is a lot of different entities that typically don't invest in private credit are investing, like our 401ks, insurers. Why? Because they're getting a higher interest rate. And the problem with that is they don't reflect the risk that is truly in these. Now, the problem is a lot of these private credits did some nefarious things. And again, things you can get away with in private credit because there's no one really overseeing it. So a lot of these things were double promised. So the asset was double promised to two different tranches. So those types of things, I think, are the concerning part when you start to have like, bigger entities that have borrowed money and have gone under. That becomes an issue. So names that are have funds in private credit like BX have been absolutely destroyed, right? So you can see these names are in here. Here's just a great example. We were at high of like 187 and got down here to 162. Now we're down to 107 on BX. Even BlackRock has had some redemptions that have come in on a couple of their funds. Now, they're not huge. They're not like trillions of dollars like their entire number. And it would help if I could type in the right name there. So BlackRock, BLK, there we go. So BlackRock, but BlackRock really has gotten hit hard here, right? This was up into the 1180s and we're trading like 900. So that's a couple $100 on that one. Apollo is another name that you got to keep an eye on. KKR is another name they keep an eye on. You can see they're just basically been, since beginning of the year, they've been, keep getting hit and going down. So these are names I think you could keep an eye on. Now, a couple other names that really are on the radar, Morgan Stanley. This has been in the mix here, right? In terms of redemptions and stuff like that. So Morgan Stanley, a Wells Fargo, right? This has been ugly. Jeff has been ugly, right? So this is, all of these names have been kind of rolling over. And unfortunately, over the past couple of weeks, we've seen some of the bigger banks like Goldman, JP Morgan, even Citigroup, right? Citigroup, Bank of America, they've all had this little bit of a sell-off rollover and drift to the downside. So we've been watching all of those names, kind of, seeing what the XLF. I actually looked at a KRE, which is a regional banking index, to the downside. This could be one I would say if you take out the lows from this past week, that could be very, very interesting. Whoops, didn't want to do that. I was trying to zoom in for you. Different system here. So something like that, you can see taking out the lows, that marries up very nicely. So if they start to break again, I think that could get very ugly on the downside and continue down. Now, this has had a hell of a run. This was in the 30s back in here. So, we could definitely roll over and even see a retest of the mid 40s here. So got to be on guard with that. So let's come back into and look at what paper was coming in here today. And I've been watching this pretty much all day. So we've been talking about a lot of these names. NBIS, it's been all over Market Chameleon, and I find it amazing. And I'll come back. Let me just go back to the homepage because this was right up on the homepage a second ago. And in here, this was blowing my mind. I didn't even know they had so many of these, but there's multiple ones that have these 2x longs, right? So what this is basically saying it's a 2x long of NBIS, sorry. So NBIS, let's just come back to a chart real quick on that. Had a great day, NBIS. And it blows my mind that these guys are able to actually capture order flow from these 2x systems when all you have to do is go buy an option. Well, the problem with buying an option in NBIS is they're a little expensive. It's a $130 stock. The implied volatility is a little bit nuts. At the money options on these things, again, for the ATR that you're getting, let me just go back to that real quick. Charts, we had the ATR was, just to kind of put this into perspective, ATR on this is about 9, okay? So it's moving about $9 a day on average. Now, we've had some big moves in here, right? All news stories that have come in. But do you want to trade an at the money option with a stock that's moving $9? Do you want to trade, let's say, this week's option at the monies are, $6, $5.60 right now. So that's a little difficult to trade, and I can understand why. It's a little bit more than I like to trade. Now, if you want to give yourself any kind of time, right, and say, okay, well, I want to go out maybe to April 10s, right, and try to see what those options are. For 12.15, do I want to play an April 10 option? Probably not. I'd probably be doing this with some type of a vertical, right? You can do a 130, 150 for like $8, or maybe do it like a call butterfly, something along those lines. So NVIS, but the one thing I want to highlight is you do have these things in here, the 2x long that's getting, bringing this to the radar, right? And I think because what they're doing in here is they're buying options, right? This NVIS or NVIL is buying options in NVIS. So it's driving up the implied volatility on stocks because they have to come in and buy, right? So I think you got to be aware of that in terms of, what was going on. We had some really good movement out of Intel today. Tesla calendar spread, that to me is crazy, right? In terms of basically putting on a calendar spread, so we can look at both of those. But let's go back into some of the unusuals real quick, see what's moving here. So NBIS definitely on the radar. Again, probably not one I'm going to touch with a straight option. We did see some turn back up in the airlines. I don't think they're out of the woods quite yet, but again, they tend to climb the wall of worry, right? So as you're in this mode of finally starting to turn, and I'll just share this real quick. Let's go to a chart and go over to AAL. Is it really that exciting to be in a chart in this yet? Not quite, right? It was green today for a little while. UAL probably was maybe a little bit better, right? They gapped up. DAL was probably a little bit better. That gapped up. You could do something like LUV, which I don't know. I haven't looked at this chart yet. So this is Southwest and looked a little bit better, or a JETS, which is another ETF that you could look at, more of an average of the groupings. So, green candles, everything except AAL, right? So AAL, kind of red candle, really not that far off, but, is there something in this space? Not quite yet, in my opinion. I don't think they're out of the woods. These are the cruise lines, NCLH, the third one. So they're just kind of sitting in there, not really doing too much. A couple other names, Adobe on the downside, tremendous amount of options coming into Nokia. And I can't figure out, why or what's going on, right? Someone's coming in and just absolutely keeps jamming into this thing. So this could be one from a cheap play, right? If you wanted to play this, I could do that real quick. So 860, high of the day is 882. I'd probably set an entry bot on this one and say, let's use that level, 882, 8.82. I'm going to do the whole trading day, add options. These are cheap options, so I can get into, let's do 10, and we can do, I'm going to go out a week, and I'll probably do the 9 calls, right? So 882, just out of the monies. And you can see they're really cheap, 23 cents. So you may want to do more of those, a couple more of those to give you enough delta, really make it worthwhile. If you think they're just going to kind of keep grinding this, you could go out further, right? Because they're so cheap, you may want to go out to like April 17s for 42 cents. So I'll probably do something like that. And again, I'm probably going to try to ride this as long as possible, but I may want to use something that is a little bit tighter. So do I get some movement out of this? Let's see. This is $1. This is $2. This is $4. And I probably want to do something. Let's see, 20%. I could do that. I could do this one, but I'm going to make it a little bit larger, right? Because the options are so cheap, and it's still a percentage. But what I would do is probably adjust this. I may keep the downside and just adjust the upside. So on this one, I would then probably say something like 50%. So something like that. And then I can go back and check all of them, right? But this will give you just kind of, that one click allowed me to have these 7 trades in here, right? To be able to work my way out. And again, if I click off on one, I'll just have to go update the other ones. Or if I wanted to do that now, I could do that. But for in here, right, you can go into the nested trades and look at all the different ones. So Nokia, I could say option gain since inception. I could say 50 and adjust that one as well. Just so this looks like, okay, I get 2 good trades in 50%. I got my stops at 20, so a little tighter on that side. So I'm completely fine with something like that. Let's come back over to Nokia over here. Adobe, it just kind of looks lousy. I think Adobe on the downside from a chart, from a chart perspective, if you come over and look at Adobe on both sides, I could be talking to both sides of this because it looked decent today in terms of trying to rally back up, come back up into the gap. Let me kind of zoom in on this one a little bit. So auto, let me get rid of the volume so you can see a little bit better. So let me move this up so you can kind of see it a little bit better. And there we go. So it looks a little bit better there. Well, not really. There we go. So you can see if it was kind of breaking out through the high and they really wanted to come back in for the stock, I could see why, maybe come back up and fill the gap. But I could also see the downside because it's sitting right precariously on a very critical level that we haven't touched in multiple years, right? So that's a little bit concerning that we've got down right to that level and they're stopping it. It's also probably not a bad level to say, all right, I'm going to use this as my stop and say I'm willing to play this to the upside and use that as my stop. So I could be talking to either side of it. For me personally, I'd probably say the high of the day. If it took out the high, maybe or the high of Friday, that is, let's see, the high there is 256.70, and then the low of today is 244.61. So you got to have a little bit of movement that it can start to move on that action. I know we've had a lot of questions that have been coming in. So are there any questions you want me to answer right now?
Sorry about that. I got locked up. We did have some questions. Jim's asking about storage stocks. STX. I can give them all to you now, or we could do them one at a time. STX is one. WDC is another. MU, SanDisk.
So why he's asking is mainly because the DRAM price, or not the DRAM, the NAND priced RAM jumped last night, and some stocks in like South Korea increased their prices by 50%. So they all had good days today. I would say WDC had a pullback. STX, last time I looked, had a pullback. Even SNDK did okay, right? It stayed up there pretty well, but they're up through highs, ready to go. And MU, the only problem with MU, you're going to have earnings this week, right? So that is one where I would be very, very cautious on this one. I'd probably be very cautious in this space just because of the earnings. I think they have to do pretty well. I'll be honest with you. I think they're probably going to come out with pretty gangbuster earnings because the price of RAM just keeps going up and they can't keep up with production, right? They're selling out left and right. So all of these, I think, will do well. STX, WDC, they all should do really well. Now, the caveat is if they basically come out and they give a weaker projection, that's really where all these names are, could potentially get hurt. So STX, SNDK, right? I like SNDK. I've been playing these with call butterflies and just riding the upside because when you look at the options, they're just insane. I don't want to be in positions. I want to be in option chains. And when you look at, something for like this week or next week, next week I usually play about 10 days out. So if I can play something like that, then I would be looking at a big wide call butterfly if I can get it. Oh, I closed it down. Sorry, there it is. Which expiration is this? Oh, I had two of them open. So let me minimize this one. Minimize. Okay, it doesn't want to minimize for me. So let's look at options in here. So we're looking at 700 and there's your at the monies. You're $50, right? So it's hard for most people to trade that. So you can go as big and wide as possible. Let's just come over here real quick and do it on a simulate. If you wanted to play an SNDK, not MU because of the earnings, or if you want to play MU, then you got to be careful. You're going to mitigate it. So if you look at something like a call butterfly, let's see. I don't do an iron butterfly. I want to do a long call butterfly. So, and again, then you can start to mess around with your expirations. So we said, let's expand the top here real quick and go out to, let's just do March 27th first. And stocks trade around 700. So I can go pretty wide. I could probably get like a 704, 700, 720, 740. Oh, I gotta do it the other way. Sorry, this way. Right, and then that's going to cost me about 200 bucks for that trade. So that's not bad to get into something, because you're selling something that is so juicy right here at the 720s is really, really juicy on that. So I don't mind that in terms of something like that. You can see down here, I'd have $200 of risk on this side, $200 of risk on this side, and if it can just continue to grind up, at least. Now, here's the problem with that, right? Our ATR on this is probably nuts, right? Our ATR is probably at least probably 50 bucks, right? So if I go back over to my charts, well, I want to show you two things. One, ATR is $50. And then you can see on this box right in here that we have in, oops, I want to go back to simulate. Sorry, hopping around on you. You go back to simulate, the box in here, simulate, come on. Simulate, there we go. This box in here is the straddle of that expiration. So we probably want to be a little bit wider. So I could probably even play something a little further out of the money if I think it's going to be upside. I could probably play like a 710, 740. That's $30 wide, and then get to, let's see here. So 740. I'm going to go to 770s, right? So yes, I'm spending a little bit more money, but I've also $30 wide. I'm getting closer and closer. Now, if I want to go further out of the money, I could do like a $30 wide on the 750s and go up to the 780s. This should make it down, should decrease the cost by a little bit. I'm only spending $215. If I really think I'm going to have positive upside, I want to get into something where I can move a full ATR, that's something that you could do right there. 720, 750, 780, call butterfly to the upside. Now, you could do a condor where you sell a little bit wider, so you have more of a flattened area up in here before you really start to get hurt. So that's how I'd be looking at these names, just because they are all so expensive. They're all pretty much the same way, right? Just to look real quick at the WDC on the chart. Let's go back over the chart, sorry. And just to show you, they're all pretty volatile, right? So a WDC is moving $20 a day, $19. STX is moving $25, and MU I think is up there around nope, it's only 25. So we did an example on the SDK, which was the most volatile. You could pull it back and say, all right, I'm going to do maybe a $20 wide on WDC or STX as well. So those would be kind of the ways I would play it, just to keep your costs down on these very, very volatile names.
All right, we had another symbol popped in, XLE.
So XLE is energy, right? So this is an energy ETF, and they've been grinding higher. And I think these have been really moving with BP and Shell. XLE is relatively cheap to play, right? Really hasn't had a massive pop. It really hasn't had that breakout either. So I think if you can kind of get through the highs here, that's definitely one where you could look at the options and say, if you think energy is going to continue to be the trade, or mainly because of oil, right, and it's going to continue to grind, you can get into an option for this week for 72 cents. So it's relatively cheap. Now, you could go over to that BP or Shell. Both of those had good movement, right? So BP, there we go. Do it again, sorry. Again, 67 cents for the option. Shell, I keep writing over the wrong one. Sorry, Shell. We're about $1.65. So depending on how much you want to spend, neither of those are bad, right? Really, it's not overwhelming there in terms of the charts, and they both look just equally as good. I guess it's about how much money do you want to spend and how much do you want to risk given kind of the ATR. So if I go back over to Shell, you can see it's a little bit expensive in my opinion. When you're moving $1.74 and you got to spend like $1.75 on the options, or moving like $1.65 for the options, a little bit expensive. Now, BP was definitely a little bit cheaper, but I got to imagine ATR is probably about the same. BP is about the same, right? So because the implied volatility is up in these. Now, if you go to the XLF, those options were they're a little bit cheaper, right? They're about 72 cents. So, nope, that's the financials. XLE, I'm sorry. XLE, all right, XLE is probably the best bet. Right, you're moving about $1.14, and you get the options for about 72 cents. I think we saw option chains at the monies. So that's kind of how I would look at it. Bang for buck, 72 cents for those. That's probably the one I would play XLE out of some of the other names. So it definitely looks decent. Targets on that, I would say, you got to get through the high right on XLE. And then you're probably going to be playing. There's really not much up here in terms of resistance. So you'd have to do some type of Fibonacci to kind of extend that. And high right here is 58.22. So that'd be my next big level on that one.
Perfect. Next symbol is RKLB.
RKLB, Rocket Lab?
Yeah.
Okay, Rocket Lab's been stuck. We've been watching this. I got an alert that's kind of set for right above here. It went off today because I think it hit like kind of where my alert was. I was mainly using these closes. So it went off, and I'm looking at it, waiting for it. And I said I reset an alert at the high of the day. So that's probably what I would do with this one. I probably wouldn't get too overwhelmed with just sitting here staring at it. And I typically just try to set an alerts. Now, we have a system in here where you can go in and do that. So you can create an alert. So you put your stock in. I want it greater than, and I can put the price in. So let's say the high of today was 72.35. Now, the cool thing about what we did was you can put it as always on until you turn it off. So anytime it goes above it, it's always going to pop up until you turn it off. Or you can do a rolling one. So I could say if it goes up, okay, I'm not really liking it right now, but let's say in 0.5%, I'm going to like it again. So I'll probably put something like that on, right? So it'll just kind of give me another alert in there, and it'll say, okay, if it gets above the high, then it'll go. If not, then so. But on the chart, I don't mind it. It just needs to go, right? And a lot of these names are stuck in that same boat, right? So you look at something like Lunar, they're just consolidating. Planet Labs just consolidating. Maybe a little bit worse for wear today. Took out the 50, but rallied back up. Like an ASTS, right? They're in there. FLY. That one's looking a little bit better, but not really that excited after 3 red candles up here. So, those are all names that could be on the radar. I'm trying to think what else is in that space that I'm missing. I know there's one or two that I'm probably missing, but again, I think that's a couple names in there. But the Rocket Labs, it just kind of got to wait for that thing to break out. And then I probably playing it aggressively with calls, especially the whole space is going. And I think that's going to come from the market. If the market kind of gets its own feet underneath of it, not red candles, and we can start to get some speculation back in the market, then I think you could see this whole space get some speculation money coming back in.
All right, we have one more symbol popped up. We've time, Ryan. I guess we got like 2
minutes you're good.
left.
Yeah, I know you got a hot too. So
yep, RTX.
Yeah, I mean, this space has been hit because basically the war, right? So it's there's a lot of people coming out and saying we've used up a lot and we spent a lot of money. They're trying to get another, funding bill to get more war, more power, more money to keep this thing going. And I can't say I'm really that excited about it. It's in an uptrend. I'm not saying anything negative about it. What I would probably watch in here is that you do have a little bit of a downtrend that's coming in here, right? If I were to draw a trend line underneath of that and saying, okay, what's my highs look like? And then I'd probably look at, what's my lows look like? And I'm kind of like, okay, well, I'm kind of in this consolidation that I should be able to break out in one direction or the other. So, if I'm looking at this and saying, okay, based off of this whole consolidation, lower highs, I want to have something probably substantial. So I'd probably want to wait for this high to get broken. All right, that one right in there, if I can kind of draw it, something like that as a flat line. And then I'd probably want to wait for the lows back down to here, because I think in either direction, you're going to be able to kind of reach the peaks of the triangles, right? The peak up here, or maybe maybe even the 50-day, come back down the 50-day, break that. But I think, again, I don't want to force a trade in here. Implied volatilities are high. It doesn't really get that, again, I think you could look at all the other names. Lockheed Martin looked like it was rolling over. GD did okay today. L3 Harris was up today. And then NOC, right? So NOC was today. So RTX, I would say out of those, is just kind of stuck in the mud. I don't like the pullback, and I'd probably wait for that high to get taken out for me to jump in before I do it.
All right, Ryan, perfect job. Jim gives us thumbs up, says thanks. Great job as always, my friend. Thanks for doing this earlier today. I have
No
somewhere
problem.
I have to run now, so great job, buddy.
Yeah, just real quick, if anybody's interested, we have the coupon going on for it's what is it? We did Start 2026 MC, so Market Chameleon. So it's Start
Yep.
2026 MC. So come check it out, and we give you, I think we gave 2 free months, right? It's crazy.
Yep.
So
And
come on,
anyone
check it out.
who came via the email today, it is actually written up in that email as well. So
There
all
you
the
go. Beautiful.
information is
Thank
there in
you.
the email. All right, everyone, have a great, safe trading day tomorrow and a great start to the day. Remember to join Dimitri and I for the morning show. Thanks, Ryan.
Thank you. Take care.
All right. Everyone, remember to like us, thumbs up, follow us. Always appreciated. Thanks for the thumbs, Jim. We have a live show tomorrow morning, 9 a.m. We try to do it every day. It doesn't actually happen that way, but we do put out a video every day for the tools that Market Chameleon offers the trading community. You can go to YouTube, follow us there. It's live on YouTube and is free for anyone to watch. All right, everyone, have a great evening. Stay safe I know there's some bad weather coming through the Northeast and the South. Stay safe out there, and we will see you in the morning. Have a great trading day. Bye.